Hi there, welcome one and all. Welcome to another live webinar with us from Phillip Futures. This is Sri, your facilitator of the day. And what do we have today? Today is Meet Your Trainer session. This is a chance where you get to ask all the questions that you may have about the 4-day trading masterclass. And with us in the studio are two of our trainers, none other than Andy Tan and Michael Sim. The gentleman you see on screen right now is Michael. They will be here thanks, Michael. They'll be here to walk you through what will be covered in the training workshop, as well as address all the questions that you may have about the trading workshop. You may have heard this already. For those who are not familiar, let me just share a little bit of background about Andy and Michael. Andy is the director and co-founder of Inspirante Trading Solutions. This is the team that's bringing you the trading workshop, and Andy and Michael are members of the team who are proprietary traders. They trade for a living and they trade for Synergy Link Capital. All right. So the group that brought you this workshop is Inspirante Trading Solutions. Together, they have a wealth of experience in the industry. Andy joined Merrill Lynch Futures as a floor manager, and then served as a director from 1992 to 2005. Michael joined Synergy Link Capital in 2012 as partner and director. His career spans a whole lot of time. It's about 20 years of experience under his belt, and he has experienced both the buy and sell sides of the business from his years of experience with Merrill Lynch as well. All right, we'll also get to hear from our colleague Jane, who will be sharing with you the perks you get as a professional trader with Phillip Futures. But first, without further ado, let me hand the reins over to Andy. Andy, if you're all set to go, let me give you sharing rights and you can show your slides.
Okay, 1 second. All right. All right. Can you guys see the screen from there?
Yes, we can. Just before Andy begins, just want to make sure that you can hear us loud and clear. Please type a yes into the question box, which is somewhere at the bottom of your control panel. Just type yes and let us know you can hear us clearly. All right, thank you, Ken. Okay, over to you, Andy. Mike.
All right, thank you. First of all, thanks, Sri. Thanks the Phillip team for hosting us. Very good evening to all of you. Okay, so I'm sure some of you have attended our preview previously, but for those who didn't, just let me give you a quick run through what we intend to cover tonight. Basically, we're just going to introduce our 4 days trading masterclass. So you see the trainers out there. We're targeting to launch to do the 2 days of theory. It's a 4 days course. 2 days of theory will be on 18th and 19th of December. It's on Saturday, Sunday. And 3rd and 4th of January will be your practical. Will be held in our office at International Plaza. So I'll go through if you all what are we going to cover in a class shortly. But because there are so many questions that pop up ever since our last preview, so these are some of the areas that we will cover during tonight. One common question is, if let's say I can't turn up because I'm not vaccinated, or I only can attend the theory class. All right, so we came out with this, that you can attend the theory class on 18th and 19th December at fees of 3,500. But if you decide to sign up for the practical because some schedule change or what, and during the class that you find it so useful, then you decided on it, and then you have to pay another 1,500 for the practical. But if you sign up now, anytime from now to 10 December, you only pay at a flat fee of 4,500 per pax. But of course, we encourage you to sign up with your buddy. If you can sign up with another person, another friend of yours, we will charge 8,000 for 2 packs. All right, so clear so far, I hope. Okay, so this is a photo taken in 2018 or 19, sorry. Yeah. All right. So what are we going to cover in this spread trading masterclass? On the first day, which is on 18th December, you will cover on the equity side. You will learn about the valuation, the microstructure, trading the calendar spread, how you arbitrage between the synthetic and the calendar spread and stuff like that. I'm sure some of you all are already trading it. So just give you an example. 2 days ago, we have the MSCI rebalance. So we'll elaborate a bit more during our class. When there's a index rebalance like that, what is the general flow of the market? How can you actually trade from this? How can you actually profit from trading on such events like that? So all this will be covered during the equity futures premiere. So I'm going to go through this quickly. So we're going to give you all more time for Q&A. All right. So on day 2, in the morning, we'll cover on commodity futures. Basically, we'll cover on palm oil and in Malaysia and the SGX rubber futures. So we'll cover things like the characteristic of the microstructure, the term structure, how do you trade the calendar spreads, and trading the seasonal structure of this whole curve. And in the afternoon, we'll of course talk about the more interesting one. We'll talk about how you trade between, let's say, for example, the Taiwan. How do you trade the FTSE Taiwan in SGX against the TAIEX futures? How do you trade a FTSE A50 against the Hang Seng futures? How do you trade in different commodities like the INE crude oil and versus the NYMEX crude oil? So we learn about intra-commodity, which is a calendar spread. We also teach you about how you do a spread trading between a different exchange, a different product. So all this will be done in the theory setting. But what we hope to do is when you come over to the practical side on the 3rd and 4th of January, what we'll do is we'll teach you all more on how you actually set up on your trading terminal. How do you calculate your points? How much is it? So at least when when you look at a chart, you are able to look at the numbers. Okay, so 1 point is equivalent to like $20 or $30. So we will go through all this in detail. So that is why we encourage you all, after you spend the 2 days of theory, come for the practical, because this is where we'll teach you how you set up, and we'll go through the charts, go through a lot more details from there. All right. Let me just go on. So that is what we cover in day 3 and day 4. First of all, you come in to our office. We show you how you actually set up your calendar spread, your synthetic spread, and your intermarket spread. Oh, so go back to this, right? We'll be using TT, Trading Technologies, for all your trading. Okay. Also, just to backtrack a bit. So for this course, that the price that you all pay, let me just go through this again. The price that you all pay of $4,500, what you all get to enjoy is also you all will get to enjoy a 3 months of TT to use a TT terminal for 3 months. Basically, you get to save about $500 US per month on this. Of course, after that, if you need whichever market that you need, you got to pay the market data. But basically, you get a 3 months free. All right. So for those of you who are not familiar setting up TT, that is where the 2 days are practical. We'll go through if you're on the setting up from there. All right. So on the day 1, these are one of the things that we will teach you all. If you all trade the MSCI Taiwan, how you calculate your fair value. If we give you a scenario, how do you do your projection? How will the change in dividend affect your fair value of your calendar spread? So with all this information, you can use this to actually trade on the spread and take advantage of this. All right. Okay, and on this chart that you look at is how we trade the calendar spread on the Nifty. So we'll go through what's the fair value, how you use a fair value to apply to your trading, and then at the same time we look at flow. You look at the lower chart on the volume there. Then we'll go through how you all can trade this spread, looking at the flow of the institutions and all the genuine players who come in and roll their position. Okay, these are one of the strategy that we use. That is on this the FTSE Taiwan versus the MSCI Taiwan listed in Hong Kong. So we look at this as the Bollinger, how we can set up to put on a trade. When can you long this, and when can you take profit on this? So these are some of the spread that we will go through with you as well. All right. This is what we mean by we teach you on how you set up on your TT, how you look at your. This is just one example. How do we look at it as a price? You're using two different index to calculate it. So you use a multiplier, you use a ratio, so that you get a number, a round number that you can see. And then this is one tick or 1 point is equivalent to how much in there. So these are all what we will cover during our course. All right. And for those of you who are trading the rubble or palm, so this is what you see over there is the price, the term, the calendar spread, and we look at it as the where is the band of it that usually it trades. So looking at all these charts, you are able to see, if it's trading out of the range, when can you go short, when can you go long if it's getting too cheap. And then in the middle, you see that is where the most of the volume are traded there. So things like that is also what we'll cover. And this is this chart that you see is actually done internally by our own research. All right. So these are some of the things that we will share during our course. All right. And next we also do this arbitrage between the calendar and then how we use the synthetic, that is to leg the spread and trade on the calendar spread from there. So it looks very complicated, but actually it's very, very simple on this setup like that. I mean, if you got a view on it, but if you leave your orders in joint bid, joint offer, you may not get the trade unless somebody hit the bid and ask or leave the offer on the calendar spread itself. But we'll show you how you can actually do a synthetic. That means you can leg the spread, and then if you don't want it, you can just throw it out or take profit straight away from there. So these are some of the strategy that we will go through as well. All right, and some of the pairs trading that we are looking at, I think for most of you will be familiar with the stocks versus the index, the sector stocks, like the same banks. But we'll not touch on stocks, but we'll do more on the futures. So we'll touch about calendar spread, how you look at the fair value. We'll look at inter-commodity spreads like gold versus silver. You look at a crush spread, how you trade the soybean, soy meal, and the soybean oil. The inter-exchange, the BMD crude palm oil versus the Thailand palm oil. And of course, we have difference like the Nikkei versus the dollar yen. So these are some of the examples that we will cover. Not everything in full detail, because if we are only talking about the 2 days course. So we do encourage, if let's say during the practical time that if you're since you're in the office, we'll have time to actually have a conversation, some of the questions that you all may have during the course, we can always sit down and talk about it again in detail. All right, so like I said, I'm going to keep this really short because I want to give you all more airtime. But meantime, let me hand the time over to Jane, who will talk to you all about the commissions and stuff like that. All right, over to you, Jane.
Hi, Jane. I just gave you sharing rights, so you can put your slides on presentation mode and start anytime you're ready.
Hello, everyone. My name is Jane. I will be your main contact person for this professional trading masterclass. This workshop is our second collaboration with ITS with support from HX and TT. I will share with you all on the incentives which will help you in your trading. Firstly, HX will be offering 6 plus 6 month rebate on HX clearing fee with the low commission markup. So here you can see 50% USD for the HX indices and rubber, 50 cents Sing dollar for the SIMSKI, 50 cents USD for the CME products, which includes the cryptocurrency. 150 ringgit for the Bursa crude palm oil. With this, you are required to have to trade with a low progressive volume threshold requirement. The first 3 months with minimum 100 lots. The 4th to the 6th month, minimum 300. 7 to the 12th month, minimum 600. Don't worry on the volume threshold, as professional traders can trade 600 lots easily. Let me illustrate with an example here. If you trade SIMSKI, our commission markup is 50 cents. And the clearing fee is $2.55. Upfront, you will just need to pay. Upfront, you will need to pay $2.55 with HX rebate $1. You will receive the rebate in the subsequent month once you receive from HX, and you will just need to pay the net cost per lot $1.55. A gentle reminder that the seats are limited. So please book your seat as soon as possible. Do feel free to call me at 65311543 or email to traders@phillip.com.sg. So good evening. Thank you and once again for your attendance. Should we pass to you?
All right, thank you so much, Jane. Let me give you sharing rights back, Andy. All right, ladies and gentlemen, now it's time for the Q&A. If you have questions about the trading masterclass, questions about the trading methodology, or if you'd like to find out more about ITS's trading philosophy, now's a great time for you to ask the questions. Also, maybe I can get the ball rolling until we have a few questions on hand from the audience. All right, Mike and Andy. Andy mentioned that for the masterclass, some of the strategies that you'll be working on, as well as some of the topics and products that you'll be covering. What is the advantage of using TT? Can you use the same strategies in other platforms?
Andy, you want me to take that one?
Yep, sure. Go ahead, man.
Okay, guys. We chose to use TT because of very specific advanced features available on TT that's not available on some other system. It's not to say that the strategies, the theory, the idea that we discussed in class cannot be applicable to other kind of trading platform. It certainly can. Now, the theory class, for example, teaches you the how and why of what we do. Okay, and then the practical is where we actually show you the how, which is in a way, after teaching you what we think works and what has been working for us, for example, we want to show you the best way to implement it into the real-time market. So that said, TT in our experience has worked very well for us for our style of trading, and we would like to share with you what we value so much in that system itself. Hopefully you'll be convinced, but don't worry if you're not, because like I said, there are a lot of way of trading the ideas that were presented in the class. There's hardly just, well, you see the list of what Andy presented earlier is hardly the list of all available tradable futures to begin with, right? So what we are doing is really taking a general idea. We try to focus on a few specific product type, for example, and then let you carry the idea into the real trading. So the practical will help you with how, and we will use the system to demonstrate. And like I said, there is no reason the idea cannot be applicable to other systems depending on your needs and your trading style. Okay.
All right, thank you so much, Mike. The next question I have is, in terms of, I mean, there'll be some of us who would like to just attend the theory and practice on the strategies on our own. How would you say instead of just attending 2 days, what is the advantage of attending 4 days, like the full 4-day session?
Okay, if I may, well, in our experience for conducting classes, actually, the theory part, in our experience, actually is not the hardest part of the class. Well, what I meant is like a lot of these things we pick up over the years through our experience, then we formulate a way to strategize it, to be objectively evaluate it, and then to refine it continuously so that we can actually stay relevant and profitable using those strategies in the day-to-day trading that we are doing right now. Now, we can relay the knowledge to you, okay? And this is what we intend to do during the class. Well, it's just like when we employ a new trader, for example, we go about teaching him or her how to trade, for example. It will still be taking some time for them to understand how to best execute the idea that they will already be formulating in their mind, so to speak. So the practical class is actually, like I explained earlier, is the how part of this class. Actually, the what and the why is covered in theory, and the how is intended to show you the most efficient manner that we know to execute those trade ideas from the foundation that we will be delivering over the 2 days of theory class.
Maybe I just add another point. The whole objective of this training, so-called, is not to help you all to fish for you. If you want to help you all to fish, meaning that after this, going back, you will not be limited to all this, whatever that we taught you. You won't be limited to trading your MSCI Taiwan versus the FTSE Taiwan. We want to show you all how you can use this as a foundation. You can actually start to apply it to, say, S&Ps versus your Dow Jones or versus Russell and things like that. So at the end of the day, what we hope to do is we would give you the certain tools so that you can use this for other trading. You can come up with a new market, new idea, new pairs, but the foundation is there. So that is what we hope to achieve. And the 2 days, like I said, once we help you all to set up on that know-how, and that is where it will help you all from there. Actually, we will encourage you all, if you can, spend 1 month in our office. That is where you get to see more live information, more live trading. You get to see how the traders work from here. So this is what we do encourage you all on the practical side of things. Back to you, Sri.
Hey, Andy and Mike, just wondering, while 4 days sounds like a very intensive program, 1 month in your office, what kind of hours are we looking at? It looks extremely intensive, and will the traders be very, very strict, or will they be friendly and guiding and allow me to learn in the best possible way?
No, they'll be carrying a cane behind the participants, actually. No. What is happening is like I think Andy showed it in the picture. So we will get the participant to trade on the terminal themselves. As far as possible, we want them to do it themselves. We are standing behind as a backup for them. So what I mean is like anytime you have a question, anytime you have an issue, anytime you try to do something that you thought should be right and should be the correct way of doing what you have learned during the class and it did not work out the way you think it is, we are there to answer a question. We are there to help you get it straight.
And don't worry, because the first month of when you're doing your practical, we will put you on simulation mode, so there won't be any real money losses or gains from there. So you can make any mistake you want during the simulation, but we'll be there to guide you all through. That's the advantage of this. And hours wise, we are flexible. Thanks.
Hey Andy, what's the hours like, Andy, for the training?
Well, I do recommend you all to come in earlier. At least you get to see how the when market open, how does the market behave? Look at the closing, because there are trading opportunity during those periods as well. So for myself, I mean, I'm usually in the office by 7:30, but of course not everyone will come in that early. It's flexible, and as long as you care. To me, it's like 8 o'clock onwards to maybe about 6. But as and when you've got anything on, you can just leave anytime. Yep.
All right, thank you, Andy. I just got a message from Cynthia. She's saying that she wanted to check if we've got submission for the workshop. Cynthia, we've got your submission. We'll get in touch with you tomorrow. For those who like to learn more about the workshop, do you have the QR code on screen? If not, I can type it down on the chat box for those who like to learn how they can sign up for the workshop, Andy.
No, can you type it there, Sri? I don't think I have it on my slide.
Okay, for those who like to learn more about the workshop, as well as learn more about what will be covered in the workshop, as well as review a past section that Andy and Michael did just to address some frequently asked questions from our interested participants. The video and the registration details are all on the page. I'll type it down in the chat box so you can have a look at it. Michael and Andy, I'm not sure who's going to take this question. I'm just wondering, for your trading team, right? Like in terms of success rate. I mean, I don't need specific figures, but what would you think is like, supposing you attend this workshop and you diligently put in the 4 days and then you practice on your own, or you attend a 1-month intensive program under guidance from friendly instructors. What's the firstly, the first part of the question is, how long will I take to be good at this strategy, right? I understand it's a form of spread trading. How long will I take to implement and be good at it? The second part of the question, what would you think is the average like ROI for a trader? Like, I don't need just an average will do.
Sure. Andy, if you don't mind, I can take that as well.
Yep, sure.
Based on our experience, objectively with our past participants and students, right? Now, what we taught in the class did take them a while, but it differs from individual to individual. I'll say the span would be probably, you'll be looking somewhere realistically about 3 to 6 months to really be trading confidently. Okay, what we want is to bring you to a point where you can trade independently and you can do this with confidence, so that you can carry on and do this like a business day in, day out sort of. Okay, now to get to that point, it really depends on your personal experience and your composure and your aptitude for this kind of trading. But generally speaking, I say 3 to 6 months is probably a reasonable time span for someone from our class, graduating from our class, to get familiar and comfortable with our trading methods. Okay, now as for the ROI, again, is differing from individual to individual, but just based on record of our participants' performance, it is a spectrum thing. We have something running from like 50-something% all the way to 300%. Okay, but truth of the matter is, on average, I think it's closer to somewhere north of 60% ROI annualized. It's quite doable.
All right, ladies and gentlemen, I've shared the link to the registration page in the chat box, not the question box, okay? The chat box, so I can put links there and it'll be clickable for you. Details on the workshop can be found there, and you can also sign up there, and we'll get in touch with you tomorrow. If you have signed up and you would like to give us a heads up, just type a comment in the question box or chat box, and we'll get in touch. We'll take note of it, and we'll get in touch with you tomorrow. All right. So Andy and Mike, like this workshop, right? One of the like common questions that we have typically received would be like, I'm a new trader, right? And I'm very interested in this and very interested to, like, I mean, it's always been something I dreamed about, to be a trader. And this is a chance for me to find out whether the trader's life is for me, right? So do you think beginners can turn up for the workshop and still follow closely?
Okay. The way we design the class, right? I mean, for both experienced and non-experienced are both applicable. Actually, if you come to us from a totally blank kind of startup, I mean, it's good in a way because a blank piece of paper, you would not actually have some misconception or certain ideas is inconsistent with what we are trying to teach you. Okay. Now, but I would strongly encourage you to do the full 1 month practical class, because the thing about the idea is not the difficulty of understanding and wanting to apply it, but the actual application of that idea into the market is where it gets a bit difficult for the very fresh trader, very new, very inexperienced trader. And that's where I think the trainers' trading experience matter a lot. We will be there helping you. I mean, good thing that you'll be trading. Obviously, the practice will be in the simulated environment, so there'll be no P&L consequences. Make all the mistakes that you would be making as a rookie, and we will be there to help you correct. So you actually, in a sense, be saving yourself a lot of painful experience and costly experience, obviously, and will be a very steep learning curve, and you hopefully can pick up a lot faster than you otherwise would be able to do on your own. And not to mention the costly error that you might be making along the way, picking up skills that could be relatively easily or rather easily related to you from the trainers in the class.
Yeah.
All right. So this question that I have is, you mentioned that for trading technology, that's a platform that we're using, and typically there's cost in the platform. Savings wise, you save 3 months of subscription. What's the what's the added value of using this platform?
Andy, would you like to take that?
Sorry, what value?
The added value or advantage of using the platform as a trader.
All right. So like what Mike was mentioning earlier, it's something that we are very familiar with. I mean, after the 3 months, you decided not to use TT. I mean, that's fine. But what we want to show you is the advantage of you trading inter-exchange when you trade between, say, SGX versus Hong Kong Exchange, or when you trade your CME against SGX. So some of the products that we will introduce to you will have this cross exchange, and TT will have these facilities on whereby it's co-located and it's trader friendly. So we have been using it for quite since we started trading till now. So it's something that we are very comfortable with. Like I said, at the end of the day, we will show you how we set up on our terminal, how we set up on our TT ladder. And at the end of the day, it's really dependent on how comfortable you are. You could be using some other systems. You can, some of them are even using their own in-house system where they build up from scratch and things like that. So it's your comfort level. But the reason is TT is in partnership with us in this. So may I just take a bit of time from this that let me just share why we have this partnership with SGX. Why are they giving us all this fees waive reduction and stuff like that? It's because we recognize that there is this the ecosystem is not there anymore. So previously, when the futures floor was open, we have this natural ecosystem where people just come in and get trained by seasoned traders. But because now everybody is all working on the screen, which means that there's very little interaction, social gathering, and things like that. So the ecosystem is not there anymore. So when we wanted to do courses like that, we actually talked to SGX, we talked to TT, and they are actually very supportive of this. So that is why we are in partnership with Singapore Exchange, where they are giving up all these preferential clearing fees. And then we spoke to TT that we want to get new traders to come in, and that is why they're supporting us with this 3 months. If you sign up with TT right now, you only get 1 month, I think. Yeah. So this is something that we work with some of these vendors, and even we even approach Phillip, our co-partners in this, to give preferential rates for those who want to start up to go into professional trading. So we do take into all this into consideration, because cost will be a major factor for you to do spread trading. But we want you to experience and try this, that spread trading can actually be lucrative. If it's not lucrative, trust me, Mike and myself will be doing this for the last almost 10 years.
Yep.
So just want to encourage you all, don't undermine spread trading by itself. Yes, GT is costly, but I will look at it as a business cost, because it gives me so much advantage. I can do a synthetic. I can do a synthetic spread. That means I can lick a calendar spread on rubber. If I leave my Q on the calendar spread, I may get nothing. But if I put it as synthetic, I may get more trades than anyone else on the street. So why wouldn't I pay a bit more, think of it as a business cost, and at the end of the day, I get more trades than anyone else. So that is why we use DT. All right.
Yep. Actually, to add on to that, case in point, a lot of our participants, when they initially when they start trading, we encourage them. TT basically got two pricing model. One is called a subscription model, which we only pay a fixed cost per month, and the other being a transactional model, which you actually pay a cost plus per lot that you trade. Now, after a while, usually 3 to 6 months after they are comfortable and get familiar with it, most of them wanted to switch from the transactional model to the subscription model, because at that point of familiarity, they will be easily hitting way above the transactional limit volume of TT's transactional model, meaning they will pay a lot lesser if they were using a subscription model. So most of them switch for that reason. Okay, and like Andy said, the system itself offers a lot of features. Of course, we will be explaining. It's not a die must use thing, but we will explain to you during the class why we are using this and why we are doing it in this manner. If you could replicate this in other system, or let's say on your bespoke system that you develop yourself, by all means do it. Okay, but otherwise we prefer to deal with trading itself and let the system take care of the execution, and we just try to use the system in the most efficient manner we know how, and we will be showing you as well to execute the idea that we actually have in mind to trade actually. Andy, could you flash to slide 2? There's a little more that I'd like to expand. I think we'll probably skip a little fast earlier. Slide 2. Right. Earlier, Andy mentioned about the possibility of splitting up taking up the theory class and the practical class separately. I also like to add on to the point that because there were quite a number of requests because of scheduling difficulties given the COVID restriction and traveling plans near year end and whatnot, we have also decided to offer the option of attending the theory class online, meaning we'll conduct a Zoom session for you if you are really physically unable to attend the class in our premise. You can do it on a online system by Zoom, for example. Or let's say if you are not able to join us on the course date itself, we also have another option that you can actually come to our office to attend the video lesson in our presence as well at a date of your choosing. So that offers a lot more flexibility. I mean, I hope that actually can book into your schedule as well.
Hey, Andy and Mike, just wondering, so after we attend the workshop, the 4-day masterclass or the 1-month masterclass, what kind of support will be provided post training?
Okay, guys, we are always there to help you, and we want to commit ourselves to supporting you as far as we can. But I don't want to overpromise here. Okay, why I say that is because we are still full-time traders. We trade day in and day out. Right, in fact, right now as I'm speaking to you, I'm still staring at the skin power, which is why you see my eyes wavering a little bit here and there. So we've got to be realistic. We will definitely try our best to attend to all your question, needs, and query. But let's say on a day-to-day basis, I hope you understand why we will probably need a little bit of time to revert to your queries. All right, it will probably not be a instantaneous thing. I mean, we'll try our best if we can. I mean, depending on the urgency of the question and the problem, obviously. Okay, but we will definitely be there to help as far as we can.
Yep.
Is there anything else you would like to share with someone who's thinking about signing up a workshop or not too sure about it?
Okay. Maybe let me add this. Okay. I I think the just want to share a bit. I think Mike and myself, both of us came from Merrill. We spent quite a few years doing as a broker before we actually went into trading in Merrill. So during the time that I was in Merrill, I was actually running the index up there, doing all the index rebalance, trading North Asia, Asia ex Japan. So things like the MSCI rebalance, FTSE rebalance, all these corporate events, not events, all these events that will actually affect your futures prices. This is something that I'm very familiar, or something that we talk a lot about. We actually look at how we actually can trade from all these events. It's not just only spread, but how we can actually make money from all this. So some of this experience that I spent 20 years in Merrill, so it's something that we will share during the course as well. So we can even share things like, oh, so what a kind, like one of the chart we saw earlier, we talked about the flow. Because we have been brokers for like 15 years, so we kind of like execute trades for all these different clients. So we kind of like roughly know, what kind of flows to see. So in a way, it does it gives you a different angle and different lens when the way I trade and versus someone else because of our experience. So these are the things that we felt is very useful, and it's probably talking to a lot of retailers or talking to a lot of other traders, something which they never get to see it as a retail client. So I find that this is where we add a lot of value into our course as well. We go through if your index, your how you calculate your fair value. Why is there sudden dip in your in why is the future suddenly going to such a deep discount after a rollover? So all these things are something that we find is going to be very useful, especially if you have been trading some of the index like SIMEX, or Taiwan. So these are some of the insights that I would say it will add value to your trading after this. Right. So that's for me. Right.
Mike and Andy, so as we know with the market, there being so many trading causes out there, what would you say is the key difference between a workshop that ITS is running and something that like someone can attend from any one of those that are offered elsewhere?
Okay. I think I'd like to pride ourselves or design a curriculum in a way that we are not teaching you a magic formula or a certain fixed way of doing a particular trade or trade type, for example. Now, the one constant thing that's going on in the market is that of change. Okay. Now, what I'm trading today and how I'm trading today is vastly different from what I'm doing 2 to 5 years back again. That happens because as market changes, right? Different participants, different market conditions, and whatnot actually changes market. The dynamics of the whole market structure itself changes with it. So when you are actually applying a static strategy, let's say at points at year 0, for example, and things happen to change in year 1 and 2, at the end of year 2, the strategy would no longer be applicable. You had better be able to recognize that, because things like that will happen and will keep happening. So what we are teaching, not really a method. Of course, we use the foundation of a method to illustrate an idea that we are trying to convey to you. So we are trying to, like Andy said, teach you how to fish and rather giving you a fish, because the whole point is to be able to bring you to a point to trade independently. All right. So with these ideas, you can actually explore a lot more applicability in other products that we do not or will not be covering in the course itself. Like, say, to give you an example, in our trading room, for example, of 10 traders thereabout, right? So we are mostly looking around the same, broadly the same suite of products, or some even the same ideas actually. But each of us have very different preference, risk preference, entry and exit preference, for example, or the way we look at things, the way we evaluate stuff. Our risk appetite and our sense of timing and the preference of holding, length of holding the trade, for example. So we may actually trade differently. Actually, we may even approach it in some different way from the next person actually at the next table. So in that sense, what we are doing differently is we are not teaching you a method, rather we're teaching you a idea, a way that we think can help you stay relevant in the long run, as long as you do it consistently and follow the good principles of risk management that we will be also teaching and covering on the class itself. Then you will be able to run or approach this whole trading business, our whole trading like a business, which is what we are doing. Now, we are no different from other traders. Okay, one of the main thing that strikes me when I first joined SLC is that there are no star traders. Okay, we don't, or rather they don't gun for the windfall, like a few 100% return at one go kind of thing, but rather they will go for the 5-10%. But they do with so much consistency, and for such over a long period of time, they become very successful, and they continue to be successful actually. Don't mind my saying that. Okay, so that's what we are trying to help you to do. I mean, a lot of people trade. Unfortunately, in my own experience, a lot of them are really successful. There are quite a few who fall off the wagon over the years as well. And when we look at it, I mean, there are a lot of reasons, obviously, but one of the main reasons is the inability to really have a solid trading plan that works. And we are hoping that what we have been doing, like Andy said, we've been doing this for so many years, and we are still doing it. And we are hoping to teach you how we actually run this business, how we trade as a trader professionally, and how you can do this like us for the long haul.
Yeah,
Okay.
so just to add on what Mike just said, so basically the key difference is we are traders. We are trading this full time, and whatever that we teach or whatever that we share during the class is update, is real life as what we are actually trading right now. So the whatever charts, whatever that we share is really up to date, and it's not something that is all on theory only, but we just want to share something that is on the practical side of things as well. So how we actually do it, how we manage our risk, how we approach it from there. So that is our key difference, that we are full-time trader. Yeah, sure.
All right, thank you so much, Andy and Mike. Well, we still have a few minutes for questions from the floor. If you have additional questions, please head to the question box and type them in, and we'll get your trainers to address them. Meanwhile, Andy, would you be able to share the slide that you shared earlier about where, you know, if you attend the workshop with a friend, there'll be an additional discount?
Yep, it's the one, right? Yep. So at meet 1 it's 4,005. At meet 2 you get.
Sorry, we're still seeing the first slide.
Yeah, that's the first slide. It's on the. You see the pricing there?
No, I'm seeing the cover slide. I'm not seeing the one with the pricing.
Oh, that's the one here. Yeah, because the other one is only on for those who can only attend theory. This is the one, right? Are you referring to this?
Yes, correct.
Mm.
Yes, so if you're a Phillip Futures customer, you get an additional discount as well. So it would be benefit you both ways. I mean, you get Phillip Futures discount and you bring a friend who's very interested in learning to trade professionally. So you get to enjoy the additional discount. If you have, I mean, if you don't have questions right now, if you have questions later on, uh, by all means, you can type them down in the survey form right after the webinar, and we'll address those questions in our follow-up email tomorrow. If you have any other questions and would like to reach out to the traders directly, Andy, would you mind sharing your contact details once again? If you have technical questions or you have any additional questions about wondering whether you could shift your schedule, maybe like for the 1 month schedule, you like to do 2 weeks first and then take a break because you want to spend time with family, or speak to Andy and Mike about if you have scheduling issues, and they'll work out the plan for you as well. The contact details for Michael and Andy can be found here on your screen. So take it down and just let it sit with you, and send any questions that you may have either through a survey form right after this webinar, or send them directly to the trainers themselves. Okay, if you're looking to visit the registration page and learn more about what's going to be covered in the workshop, as well as sign up for the workshop, the link to the workshop can be found in the chat box. Okay, so just the chat box is normally right at the bottom of your control panel. So just click on it and visit the registration page. All right, we have a question from Albert. Albert is asking, what's your FCPO as percentage of your total portfolio? Like, what's FCPO as a percentage of your total trading portfolio?
Well, that is
That's
actually
a quick problem, right? Very specific question, Albert.
Well, first of all, there's no short answer to that, because that ratio, if there is a measure, is actually varying all the time. We are, how should I say, what we'll be showing as well. Okay, we are basically opportunistic trader, in the sense that we'll be teaching you how to cast the widest net possible. Now, at any one point of time, the market will be moving, or there'll be opportunities presenting themselves, but not in all equal terms. So basically, when we do that, let's say, for example, if I was looking at CPO and I was looking at rubber, but at a point of time when, I'd say at a certain point of time when rubber is actually offering the opportunity to enter or exit trade, for example, I'll be focusing my effort on rubber. So that happens throughout all day and all the time actually, but it doesn't. What doesn't happen is like it will not actually happen at a fixed time or a fixed day, for example. Okay, there are some regularity, but in that sense, it's hard to really point the finger at what ratio we do. Okay, but we certainly do a lot of CPO, we do a lot of rubber as well as the other indices that we'll be covering as well too.
Mm.
So, Mike, would you be able to sum up some of the key products that they will be working with during the workshop?
Okay, sure.
No.
Okay, we start with the indices, right? So from SGX side, we'll be doing the MSCI Taiwan, SIMSKI. We'll be doing the FTSE A50 as well. Okay, and then we'll be covering the Hong Kong Exchange MSCI, SIMSKI, Taiwan, as well as the HSI, to take a quick look at those indices. And BNB side, we'll be looking at the KLCI too. All right, and also I failed to mention SGX Nifty too. Okay, like I want to reiterate again, these are hardly the whole list of tradable products or index for that matter. All right, so we are using this as an illustration of the idea we're trying to deliver to you. The principle behind the trade. We explain the how. Well, we explain the why and the what, and then eventually we show you the how. Okay, those are the indices sides. Okay, on the day two, we'll be covering things like the commodity side of the equation. We'll be starting off with CPO. which is obviously one very popular product in our region. And then we'll be talking about rubber primarily. And then we'll also be talking about other inter-exchange across product kind of commodity spreads. And then we'll move on to more advanced spread that we wanted to talk about after you have the foundation layout. And then we will just end it from there.
All right, once again, we have one last question before we take it. I'm just going to remind the audience that you can still ask questions through the survey form at the end of the session, or reach out to your trainers directly with the contact details that they shared earlier. Alternatively, you can get in touch with Phillip Futures by visiting the registration page, the link to which I've added into the chat box, so you can click on it and visit the registration page. This last question is from Albert. It's a follow-up question to what he asked earlier. He's asking if you could share the average percentage over the last few years of CPO in your portfolio. Maybe a bottom line number. Would you like to take this, or would you like to show him during the training workshop directly, Mike?
Well, like I said, this is a varying number, so I hardly will pinpoint a finger there. You need to know there is no relevance to the number per se, in a sense. It really depends. Like, for example, if I use a say, for example, a 3-year period of data, that number probably be very high. But if I take a 10-year period of time, the number will probably not be. So you get a sense of what I'm saying when I said during varying periods, varying opportunities to different asset class or different asset type for the matter, different product type. Okay, so as and when, what we are doing is, once you get the idea of what we are doing, for example, is basically to get out there and to sense when these windows of opportunity are opening up, and then to be trying to be beat the queue, so to speak, to go ahead and then take seize the opportunity and then just get the trade done in the best manner possible. So over a period of time, I wouldn't really want to put a number there, but I mean, we can discuss this, but then I kind of don't see the relevance at this point.
Yeah. So like what Mike say, we basically just cast the net across the different markets that we trade, and whichever that give us the most or the best opportunity, that is where we'll pile up and we'll do a lot more from there. So we can't really give a very definite number, like a hard number saying, okay, the X percentage of it is based on SCPO, X number is based on rubber, X number is based on Nikkei. So it all varies. It varies different every month. It varies every year as well. So we don't have a hard number that we can share on this.
Yeah. For the matter, even for trader to trader, the number will be different because, like I said, every trader is different. The idea is the same. We share across, like for in our room of traders, for example, right? But we will still turn out very different numbers for all these asset classes and products. So it really depends on individual and how your trading style will eventually evolve, become.
Yep.
All right, thank you so much, Andy and Mike, and thank you to our wonderful audience for joining us in this session. If you have further questions, please send them in through the survey form at the end of the webinar, or you can reach out to our trainers. Andy, can I trouble you just flash the contact details once more? If you'd like to visit the registration page, you can find it in the chat box. All right, and thank you for being a wonderful audience. Do look out for our follow-up email tomorrow. Until our next webinar, we'll catch you then. Stay safe.
All right, good night, guys. Thanks very much for attending.
Good night. Yep.
Bye.
Thanks for joining us. Good night.